The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. And since we're in the thick of things, if you should have any questions, we sure would like to help you. 803-0930, 803-0930, star 930 on a cell phone, and you can text us at 3930. And I've got Tiffany Fabian here with me. Hey, Tiff.
Hey, I'm texting a taxpayer, one of my clients. They texted me, and I'm glad to see you.
I'm glad to see you, too.
It's good to be out of
but
the
don't
office.
Really see you. All right, so we're going to talk taxes. 803-0930, 803-0930, star 930 on a cell phone, and you can text us at 3930, and we want to help you. We were kind of having a discussion last week to get started with how different income is taxed, and wanted to continue that. Sick pay, is that taxable, Tiff?
Sick pay is not taxable. Disability is taxable, but sick pay is not taxable.
No, sick pay is taxable.
Sick
pay is
taxable.
in your.
I'm thinking of
you're thinking of disability.
Yeah. Okay.
You're thinking of New York State disability.
Yeah.
VA benefits not taxable.
Right. That's right.
Social Security, really important. It may become taxable, and you really can control it. Almost everybody, maybe not everybody, maybe 20, 30% of my clients, when I'm sitting with them, can utilize an IRA to reduce their adjusted gross income and their tax liability. And many times a senior who thinks, well, I really don't want to do an IRA because I really don't want to. But you can use it as a tool. Remember, you put this money away and it reduces your adjusted gross income.
Yep.
And if you have wages, you qualify. I just had a lovely couple in my office maybe 45 minutes ago, and she had $5,000 in wages, but she was 74. And I said, oh, too bad we can't do it this year, but next year you can, because now the 70.5 limitation on IRAs are gone. So if you're somebody that has Social Security and you are finding you're paying taxes on it and you have wages, look at that IRA to reduce the taxability of your Social Security.
And yesterday I had a client, and one of them is an Uber driver, and he has quite a bit of net profit, and his wife is self-employed, and they both did SEPs, and it saved them a considerable amount of money too.
So I wanted to kind of give an example. So let's say that you're a couple. Again, if you're married filing a joint return, when you add half of your Social Security to your other forms of income, excuse me, if that answer doesn't exceed $32,000, then you're not going to pay any taxes on your Social Security. $25,000 if you're single. So let's say that you have a pension or an IRA of $10,000, Social Security of $24,000, and you're single. Well, you wouldn't pay taxes on your Social Security because half your Social Security is 12, added to 10 is 22. It's not over 25, so none of it's taxable. But let's say Uncle Charlie says, let's start doing the casino. So the same person starts going to the casino and maybe has $30,000 in wins. Well, unfortunately, the way the law is written, the win goes on page 1 of the 1040. And the losses, even if you lost it all, it's an itemized deduction. That win can cause you to pay taxes on your Social Security. So what would happen is you'd have that same $10,000 pension, the same Social Security, but if the gambling, was 20, then you'd have $30,000, and half of your Social Security be 12. So 12 and 30 is 42 minus 25 means you have excess of 17. So half of that would be taxable, like $8,500. And so that $8,500 you'd end up paying taxes on because you gambled.
Right. And none of your Social Security, of course, is taxable on the state of New York.
That's right.
Yeah.
It's a back off.
Right.
So I'm Esther Gulius, the tax lady,
But your gambling
8030930. What?
But your gambling winnings are taxable on New York.
Well, in and out, right? All right, let's go to the phones, and we got Terry. No, we got Terry. Hey, Terry, how can we help you?
Hello, Esther. Esther,
Yeah.
for all the tips that you give.
Thanks.
They're very helpful. I was just wondering if you knew anything about the New York State tax forms that are coming out. Are they on the way, or what's the holdup?
They don't mail those out anymore, Terry. They haven't for years. So you really would have to go to the New York State website, and you can download them. They would prefer you to do it electronically, and if you go on their website, you can find out somebody that can help you, or I think they provide the service if you're a lower income person.
And if you want me to, you can call me and I can mail them to you if you really want me to.
Yes.
Yeah,
You do. Okay, so what we're going to do, Terry, is
Or just call me at the
Do you
office.
you got an email?
Not right now set up.
Oh, okay.
Well, just
All
call me at the
yeah,
office.
call us at her phone number at the office is 632-7886, 632-7886. Ask for Tiffany after the show, and she'll put you together a packet, but they really don't want you to send it in paper. They want you to do it electronically.
What was I went to the local library, and they said mid-February, and then I tried online, and it doesn't respond to.
Yeah, you'd have to download them, but Tiff will download it for you and send it to you, okay?
Were you able to get the federals okay?
Yeah, the federals were there in the library.
Okay.
Yeah.
So the state has been a problem.
Now, are you retired?
Yes.
Do you know that the first $20,000 of your pension is tax-free if you're over the age of 59 and a half in New York, right?
Yes.
And you're not a state employee, are you? A state retiree?
I was a New York State.
All right, so all of your pension is tax-free on New York State. You have Social Security?
Yes.
All that's tax-free on New York State. So what else would you have to file on New York State?
Just money taken out of the IRA.
And how much is that?
Well, it would be, enough to make it taxable. I know that.
But he's
Not
gotta,
really,
he's gotta
because you
show
got a
the
standard
subtraction,
deduction.
though.
So you're going to end up probably not paying any taxes at all. But anyway, call Tiff and she'll help you. Okay, Terry?
Call. Who should I call?
Tiffany.
632-7886. My extension is 1002.
Okay?
Okay.
All right, thanks.
So much. You are so helpful.
All right, thanks, Terrence. I'm Esther Golias, the tax lady from EG Tax. We got all of our offices open tonight till 9, right?
Yep, tonight. Tomorrow, the McKinley Mall
tomorrow
is open.
only the McKinley Mall is open, right?
From 10 to 5 at the McKinley Mall, and they do a great job over there at the McKinley Mall.
All right. So, and, I think the whole thing is we really care, and
Yep.
we're local, and we want to help you. So we're going to take a short break. We'll be back with your calls on the other side. I got all my sisters and me. Hey, we are family. We think of you as family anyway. And just like that last commercial that played,
What's
you know,
more expensive?
yeah, I mean,
costly?
the most expensive thing, when you get all done, I've done, a lot of people this week have done TurboTax. And I said to them, when you're all done, do you know you did it right? And they go, no, we have no idea. If it's right, we don't even know how to, And that's the thing. You don't plan. You don't know if it's right. And but at EG Tax, you're sitting there with your tax accountant. Again, and if you really want to, we have something called Take Home the Tax Lady. So we've had that for a long time. You can email everything into us, but we still interview you because it's so important.
And it's so funny, when you're sitting there doing somebody's tax return, you just look at the things that they're doing. Like I've been talking to so many clients, and they're contributing to Roth IRAs in their 401ks at work. And I'm like, why? And so you talk to people about those little nuances
That they don't know about,
and their
right.
health insurance and things like
Absolutely.
that. Yeah.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, or you can text us at 3930, and we're going to go to the phones. We're going to talk to Mr. Tim. Hi, Tim. How can we help you? Hello, Tim. Earth to Tim. No Tim. Tim is not there? Okay. And we're going to go to Helen in Tonawanda. Hi, Helen. How can we help you?
Hi, I have a double, and I live upstairs,
Sure.
and I've been doing some renovating.
Yep.
And I renovated my kitchen, and my accountant says that I can't take any of that as a deduction because it's in the apartment where I live.
That's correct. Your accountant is correct. When you have to think about when you live in a double and half of it's rental, that means half of it is considered a business. because the reason they're allowing you to take your expenses is because they're assuming you have a profit motive for the rental portion. When you have a profit motive, then you're able to take the expenses to produce the income. The other part that you live in is where you live personally. And so because it's personal, it's not a business, and so therefore the expenses aren't deductible except for half of your property taxes and half of your mortgage interest if you itemize.
Okay, so if I switched apartments now, could I do it?
Well, okay, so let's go. So we had, let's
She
say
moved
the
to the
rental
lower.
place was upstairs and then you moved downstairs. So what you're able to do is to adjust the basis of the property for the upstairs unit versus the downstairs unit. So you're going to stop depreciating the downstairs unit and you're going to start depreciating the upstairs unit. And so in the broadest sense of the word, you can depreciate it, yes.
Okay, thank you very much.
You're welcome.
Now, at that same token, if you got a roof or you got new windows
Where
to
it's
the house, you
perfect-
could take half of it.
Absolutely.
Yeah.
So you know, you got your
Driveway.
rental house, your roof is for both you and your tenant. So then half of the roof would be depreciable. Right?
That's right.
Or if you put a fence around the yard, half of the fence would be. But what this lady wants to do is write off her kitchen, and I think she's going to be kind of sad because it would still go to basis and it would be deductible over 27 and a half years at 0.3636, so it's a very little
Somebody
deduction.
texted capital improvement, question mark.
And that, let me talk about capital improvement. Many times people say, well, I did a capital improvement, here's my certificate. What does that mean? It only means you
Sales
don't have to
tax.
pay the sales tax.
Right.
And a lot of times, you know, people come in with all their things. They think that windows and doors are deductible. Not anymore. It used to be there was an energy credit, but that's
Right.
gone.
Right.
The only kind of thing that affects your house now is if you put solar in your house, solar electricity things. So there's a solar credit that you can take, and if you bought an electric car that's a plug-in, you might get up to $7,500 on a electric car, but that's it on that kind of stuff. So on
Right.
your house, you're pretty much out of luck.
Right.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 3930, and we're going to go to Larry. Hey, Larry.
Hi, I got a question, sweetheart.
Yeah.
Sorry if I called you that, but
Oh, I would love when somebody calls me sweetheart. It's when they call me bad names, you know.
anyway, I've been filing with your firm for 10 years,
Thank you.
but I got a different situation this year than any of the others.
Okay.
My wife and I filed, jointly every year, but my wife passed in July.
Okay.
Sorry.
That going to affect my taxes.
Okay. First of all, condolences on the loss of your wife. In the year of the death of a spouse, Tiff,
He gets to file married filing joint
Jointly.
still, which is
Right.
great. So you still get to file joint, so nothing will be
there'll
different
be no
for this filing status.
perceivable change. Now, are there children living home with you, Larry?
No, we're old.
Okay, well, I'm sorry to hear about the loss
But-
of your wife, but I will tell you the other day, I had a young man that came in, was 40 years old, and he has 2 small children, and his wife passed away. And so in his situation this year, they filed jointly. Next year, because he has minor children living in his home, he gets to file widower with dependent children. The year after that, if the children are still in his house, widower with dependent children. Then the third year after that, he would revert back to head of household if he still hasn't been remarried.
And then,
so
Larry,
that's your situation.
I've got to tell you, lots of my clients, unfortunately, if the spouse passes away, you want to plan for the following year. So when you're sitting in front of your preparer this year, make sure you guys plan for what it'll be like the following year when you're single. So you really want to look to make sure your withholdings are correct and that you shouldn't adjust anything.
That's a great point.
Yeah.
See, in your situation, Larry, because you have no dependent children living with you, next year you go to single. So your standard deduction this year might have been $27,000, but next year it might be you'd be single. You're going to be considered single, so your standard deduction is going to drop down to like $14,000. So Tiffany's right. You need to plan for that.
Okay.
All right?
Can I ask you one more off the wall question? that
Sure.
came up in a conversation.
Yes.
A daughter who's married and has 2 children. If I were to bring them into my home and I was their sole source of support, would I be able to claim them on my taxes?
Well, okay. So if your daughter has income under, let's say, $4,200, all right? I think it's $4,400.
I'm talking about if neither one of them are working.
Yeah, okay. All right, no money. Then yes, what would happen then next year, you would be widower with dependent child.
So the answer is
Is
yes,
yes.
you could claim them.
So you claim her, the child, and your filing status would be widower with dependent child.
But nothing for the husband.
Oh, you mean the husband's coming in too?
And he doesn't work?
Honey,
So you got the daughter, the husband, and the kid?
yeah, I've
Then you'd have 3.
situation before.
But now, if the husband makes more than the $4,500, then he can't be claimed.
Okay.
Okay?
Yeah, I'd like to think he's going to get a job, but
Well, remember, this would have to be they would have to live in your home, and because he's over the age of 19, he couldn't have, and he's not a full-time student. He could, and he's under the age of 20, over the age of 24. If he makes that $4,500, you can't be claimed.
Okay.
All right.
That's good. Okay.
Hey, thanks for calling, Larry. Bye-bye. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 3930, and we got Betty from Williamsville. Hi, Betty.
Hi, Esther.
What's happening?
Well, my inquiry today is that several years ago, when I had my taxes prepared, because they were under $40,000, the man said I don't have to pay estimated taxes anymore. And so I haven't. I've had no withdrawals from any of my income. I have a retirement income, and I have Social Security, and I have an IRA where I have an annual withdrawal. So my question is, because of the new tax revisions, will I be looking at a very big tax bill this year?
Okay, well, first of all, the tax rates went down. Okay, so under tax reform.
Okay.
But number 2, it really had nothing to do with $40,000. It has to do with your liability is less than $1,000. If your liability on the federal is less than $1,000, you're not penalized.
Now, my liability on the federal.
Right.
What does that mean?
Okay, so how much is your Social Security?
My Social Security is approximately $19,000.
And how much is your pension?
About $14,000.
And do you have any other source of income?
The only other thing is
that distribution?
The IRA.
And how much is the IRA distribution?
$2,500.
How much?
$2,500.
Okay, so you have taxable income then of $16,500. And are you over the age of 65?
Oh, yes. Quite older.
Okay, so we got 12, let's see, 12, 2, and then you got 16, so it's 8, 13, 8. All right, so your taxable income is going to be about $2,000. So your tax bill is going to be about $200.
So to answer your
which
question,
is way
you were,
under
you were
$1,000.
fine to
so
not
you're
do
fine.
estimated payments.
Yep.
Okay. Now, the only other thing is, and I haven't received it yet, is I have money that I have invested, and I have not gotten my statement from that company yet.
They're not due till February 15th, the
Right.
brokerage statements.
Right.
But from when we talked about what my earnings were for...
Well, that'll be over and above. So you're in the 10% bracket, but much of your investment might be capital gains. You're in the lower than 15% bracket, so you're not going to pay any taxes on the capital gain portion. As long as it's under $1,000, you don't have to make estimated payments.
You mean, okay, you mean my earnings in that investment?
Right. But it all depends on how much money you made. If your broker sold a lot of stock and took a lot of profits, you could owe more than the $1,000. So it all depends on how your brokerage statement turns out.
I should be prepared to pay somewhere between $200 or $1,000.
Well, whatever. One doesn't know. We don't know. I don't have a crystal ball.
No, I understand.
Because of the brokerage
Right.
statement.
I understand.
Okay, Betty?
Okay, my dear.
Thanks for calling.
My pleasure.
Bye-bye. I'm Esther Golias, the tax lady from EG Tax. You can give us a call at 8030930, 8030930, star 930 on a cell phone. And I'm going to take a quick call. Let's see how fast Nancy can be. Hey, Nancy, what can we help you with?
Hi. I called the tax guys. They said, call back, call you. So I'm calling.
Yeah.
Here we go. I made a distribution from my IRA. They wrote it to my church. And I know there's somewhere on your...
Okay, now how old are you?
I'm 71.
Okay, so this was your RMD, right?
Yes.
Was it direct from your IRA to the church?
Yes.
Then you're on your 1099-R, that's a qualified charitable transfer, and up to $100,000 can be taken out without paying taxes.
And where is it on the form?
It's on the 1099-R form. On the pension line. Nancy, you want to hang on? I got a break for news.
Sure.
All right, thanks a lot. I'm Esther Golias, the tax lady from EG Tax. See you on the other side. Hey, we're family. We want to think of you as family. We hope you think of us as family. I'm Esther Golias, the tax lady from EG Tax. We got all of our offices open tonight till 9. Tomorrow, we only have one office open, which is the McKinley Mall, because we conform to mall hours. But we give Sundays off to our staff because we hope that they have time to refresh and worship, right?
Right. That's absolutely right.
All right. And so if you want to give us a jingle, 8030930, 8030930, star 930 on a cell phone. And Nancy, I thought hung up, but she's back. So Nancy, what's important is you did this RMD from your IRA, and that's when you can do the charitable rollover. And Tiff, you know what line it
goes on line 4A, Nance.
Okay, 4A.
4A.
Distributions?
Yep, IRA distributions, right.
But it's not going to be taxable.
It's on line 4A, but not 4B.
Okay. So then that gets deducted somewhere, right?
No. Line 4A shows the amount you gave. Line 4B says how much of it's taxable. 0.
So you would put in 0. Okay.
Right.
That's what I didn't understand.
Okay?
That's what we're
here
for.
It's an absolutely great way. If you're somebody that can't itemize anymore and you're somebody that gives to church or charities, it's a great way to fund your charities with which ends up to be 100% deductible. It's remarkable. So that RMD out of your IRA, and even though now they say you can wait till 72 to take the money out of your IRA, they left the provision back on the charitable rollover at 70.5. So it's a great way to put up to $100,000 tax-free into a charity and get the full benefit of it. So thanks for waiting, Nancy.
Thank you so much.
All right, thanks, dear. Bye-bye. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and 3930 is our text, and we got a text right here.
I am a 21-year-old that I've made about $14,000 last year. Will I be able to get back all of my federal and state taxes, and can I claim head of household?
All right. It's really interesting because I was wanting to talk about this today.
Right.
Head of household filing status is so important. A lot of people think, I'm going to be single head of the house. I got myself an apartment. But that's not the way head of household rules work.
Right.
Head of household rules say that, yes, you're single or considered single for tax purposes, and you have a qualifying relative that is a dependent of yours living in a home that you're providing for at least 6 months. So, the last 6 months of the year. So, if you are a single person with no qualifying relative that you're supporting in the house, then no, you're just a single taxpayer. Now, the good news is your standard deduction is $12,200.
Right.
So all that's left to be taxed is $1,800. Right?
That's right.
So at 10%, which means $180.
And then
if they took $1,000 out of your paycheck, you're going to get back the difference between $180 and $1,000.
Yep. And if you put
but on the state of New York, not good news, right?
Right. He's probably not going to get all of his tax back from New York State. So you will get the majority back from federal, but not
the majority.
New York. Yeah.
And
then don't forget, if you put money into a 401k, there's also a retirement savers credit done on a form 8880.
That's true, which would get you, I did this the other day with somebody, like for instance, at that bracket, this kid with the 18,000, 14,000, what do you say, 14,000.
Right.
If he put $200 into his IRA, he'd save $100 in taxes.
Right.
Right?
That's right.
So if he put in 250, he'd save 125,000. 120. So you can work out the numbers so that you don't pay any tax liability at all.
Yep.
I'm going to tell you, IRAs are a great way to manipulate your tax liability.
Yep, that's right.
And then on top of everything, there's a pension savers credit. Okay, let's go back to the phones, and we're going to talk to Abby. Hi, Abby.
Hi, I just have a quick question.
Yeah.
I think that I forgot to pay one of my estimated tax.
Oh, my God, they're going to come pick you up, Abby. No, I'm really kidding. It's okay. It's an estimate.
Okay, but if I didn't pay one of them, am I...
All right. Well, first of all, good news is the last estimate is due January the 15th. This is just February the 8th.
That one.
So, I mean, if you could take a shot at it and get it mailed in. I bet you they would put it towards your 2018 return. But why not just file your return and pay if you're going to owe some money? And it's less than $1,000. You're not going to be penalized anyway.
Oh, no, it would be more than that, though. I think it's about the second payment that I missed. So I sent one. I think I missed two of them, and I sent one in with this last payment in January, but I think I'm missing another one. So.
Well, whatever your liability is, that's what you're going to end up paying. So that's due April the 15th.
Mm-hmm. Yeah, because the IRS likes their money in equal periodic payments throughout the year.
You can do 2210 to mitigate some of your penalty, but you really aren't. If I were you, I'd get my tax return together as soon as possible so you can figure out how much your liability that you're going to be short is.
So how is that liability figured? Just the amount that the payment was?
No, whatever your income is, less your deductions, less your credits.
I see.
Equals a tax liability reduced then by your estimates, and that'll mean then what's left is what you got to pay them.
Did you have any wages in 2019?
Well, I'm not working. I'm retired.
Okay.
I was thinking of you putting money into an
IRA.
IRA.
But the great thing is, if you do your tax return now or soon, then you'll know if you owe anything, and you can get that sent in April the 15th, and that's that, and then you get on the straight and narrow for this year.
So when I do the taxes, are they going to be able? Do I have to call the IRS and find out if they've gotten 4 payments or only 3?
Well, I mean, you can call the IRS.
Get a copy of your
transcripts.
transcripts.
You just are going to have to wait on hold a long time.
But there's no other way to find out.
You don't have your checks?
What?
You don't have your checks that you sent in?
I might have to hunt through.
Well, there you go.
Okay, thank you.
Okay, thanks, Abby. Bye-bye. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 3930. Okay, well, we're going to go to Mike. Hey, Mike.
Hi, Esther. I have a question about some income that I received this year. So my employer gave me a W-2, and then they also gave me a 1099 miscellaneous.
Okay.
And I went through the online software, and it took me to Schedule C and about being a contractor and all these forms that I didn't think were necessary. And I just wanted to make sure that I'm doing the tax.
Tell me which box. All right,
Yeah, what box is the income in on the 1099 miscellaneous?
Box 7.
What does it say?
Non-employee compensation.
Yeah.
Why would your employer have given you a 1099?
It's kind of an involved story, but
Well, give me like a thumbnail.
Okay, so they hired me at a certain salary, which was a posted salary, and they couldn't pay me more than that, but they decided to hire me for more, and so the amount in surplus of the posted salary, they just cut me a regular check for. So it was $3,000 more than what I was hired for, and so that's how they decided to remedy the situation. So then I got stuck with a W-2.
Okay, so, all right, so the truth is you do got to put it on a Schedule C. Schedule C easy even if you want. Schedule C, you're going to have to pay your own FICA. They really didn't handle it properly. It should have been through payroll.
Sure.
You know, you can ask them to pay half of the FICA, but you're going to have to go to the Schedule C, as Schedule SE for the self-employment tax. How much is your you didn't make over $132,000 with these people, did you?
No, I did not.
Okay, so you're going to still owe the FICA.
Do you have a room in your house that you do work in that's solely and exclusively used as an office?
No, I do not.
Okay, and there's no specific expenses that you incurred to make this $3,000 bonus, right?
No, there is not.
Yeah, so you're just stuck with it, Mike.
Yeah, basically.
I mean, you might want to put money into a SEP.
Yeah, or you maybe you can put some money in an SEP, but he can put money into an IRA maybe too.
Right.
You know,
right.
But it's not going to help you to get rid of the FICA.
Okay.
Okay.
Thanks for the advice.
All right. Thanks, Mike.
Okay.
When it's in a non-employee compensation, it goes on a Schedule C.
Right.
So that's why we
here's
wanted to
the
know
thing.
the box.
When you get a 1099 form, that means that this is miscellaneous income. If it's miscellaneous income, non-employee compensation, right? That means that it means that you weren't an employee, so you didn't get paid on a W-2. This guy obviously was an employee, right? So it really isn't right the way it was done. But I had a lady the other day whose land was sold, and the guy that typed up the 1099 should have done it on a sale, a 1099-S, right?
Right.
But he sent it to her on a 1099 non-employee compensation.
Oh.
So, and he said I should just fix it. Well, I can't fix it. It goes into the IRS.
Right.
He's got to fix it.
That's right.
So some of these things that are wrong, before you accept it the way it is, you want to make sure you get whoever typed it to make sure that they handled it properly. Otherwise, it goes into the IRS this way, right?
Yeah, they have to issue a corrected form.
Okay. And
Want me to do that text?
Yeah.
It says, are the forms ready to amend the 2018 to include the PMI deduction that was retroactively approved? I haven't seen a 2008 schedule revision yet that includes this deduction. And so actually we've had all of our software updates, and I looked today and I didn't see the revision either.
Our revision's coming out in March.
Right. So there you go. I think the answer for this texter is March.
Yeah. So here's the thing for other people. If you have PMI, like let's say you had $1,000 in PMI, last year you couldn't take it because that's how they made the law. Well, then at Christmas time this year, I don't know whether they were in a jolly mood, they said, you know what, let's put the PMI back in and let's make it retroactive to 2018. So if you were somebody with $1,000 PMI that you didn't take last year, that means you can amend your 2018 return and put the $1,000 there. And if you're in the 20% bracket, you just save $200.
That sounds like
right?
a good plan.
And you
to
wouldn't
me.
amend New York State because you already put it on the New York State return because they allowed it
Right.
last year.
Right.
Okay? I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and you can text us at 3930, and we're going to go to Mike. Hey, Mike, how can we help you? Hello, Mike.
Hello.
Hey.
Okay, I have a question about gambling winnings and losses.
Okay.
Now, if your gambling losses are more than your gambling winnings,
right,
to report the winnings?
You have to report the winnings. On page 1 of the 1040, you take the losses as a miscellaneous itemized deduction on Schedule A.
Okay, well, I didn't have enough itemized deductions.
I know, and that's why you're going to get shafted. But that's the way the law's written.
So there's nothing you can do with that. You have to report the winnings.
You report the winnings, and the losses are a miscellaneous itemized deduction, not subject to 2% on the Schedule A.
Okay, so in other words, you have to claim the winnings, but you can't claim the losses unless you itemize.
That's exactly right.
Okay, very
That's
good.
a sad story, isn't it, Mike?
Yeah.
Yeah,
It
don't
is.
forget this year you can also count travel for gambling. So if you get a hotel, if you have to take a airplane to Vegas, you
But
can
of course,
also add all
if
that.
you have
Yep.
losses up to, you're
Yep,
limited,
yep,
right?
yep. You're limited.
Okay, Mike, it's a sad story, but that's one of the sad things with me that I see with seniors is that they gamble because it's a pastime, something to do, right? And so they've lost everything they win, but unfortunately, with the income ending up on the page 1 of the 1040, it increases their overall income, which then increases the taxability of their Social Security. So it's a double whammy.
Right, it is. I know that my itemized deductions were less than the standard deduction. That's why I didn't take that.
And that includes your gambling winnings, right? Losses, right?
Right.
Okay. Sorry, Mike.
Okay, thank you.
Thank you, sir. Thanks for calling. Yes, sir.
Oh, I was going to read the text to you.
Okay.
Hi, Esther. Enjoy your show. Was told if I collect rental income, I can no longer be eligible for the earned income credit. Is that correct? That is not correct.
Well, it all depends if you have disqualified income.
Right.
Right?
Right.
So remember, the earned income credit is designed for people that are working, and there's two kinds of earned income credits, actually. People that are working that have children living in their home, right?
Yep.
And are on the lower end of the income spectrum, and that was designed to give those kind of people with those kids a hand up. Mm-hmm. So then they said, well, it isn't fair, though, that somebody that we're giving a hand up and giving them money that they didn't pay in. I mean, the truth is an earned income credit gives you money. It's like a welfare system. It's not fair that we give somebody an earned income credit that has a bunch of positive cash flow from rentals and interest and dividends.
Right.
And so that's called disqualified income. So in your situation, if you have enough disqualified income, and I think it's like
27.
Is it 27? 37?
2,700, 3,700.
Then you don't get the earned income credit because they figure if you're rich enough to have a rental, why do you need our help?
So if you have a profit on your rental and it exceeds like $3,000, you might not be eligible for the earned income credit, as Esther said really well, very eloquently. And then somebody said, what if you only win like $300, Esther? A text message.
Then you only put down $300.
Right. Then you could write off your losses up to that potentially as an itemized deduction.
Right.
So if you only win $300, that's a misnomer. All of your gambling
Okay, but
winnings
getting
are
back
taxable.
to this text over here with the lady with the
yeah.
why should I say it's a lady? It's a man, whatever. This person about the earned income credit. Remember, you want to take all of your expenses that you possibly can that you incurred on that rental, because it's the bottom line that is the
dictates.
Right, is what would call the disqualified income. So let's say you had rental property and you had $12,000 in income, but you had $4,000 in property taxes and $5,000 in mortgage interest, and you had $1,000 in insurance, and you had $2,000 in repairs. That means you had $12,000 in expenses to offset the $12,000 in income. So you have no disqualified income, and you could get the earned income credit.
I had a single filer yesterday. I've been doing her return for a long time, and her son went and got a rental property, and they dumped about $5,000 into it because he's living in half of it, and we only took half of the losses, and it was ready for rent. They rented the upstairs, and so she had a loss of about $3,000. She was still entitled to the earned income credit.
Right, because it's the disqualified income is if you have positive cash flow.
Mm-hmm.
But if you don't have positive cash flow, you'll still be able to get the earned income credit.
Correct.
Okay, but that's why it's so important that you do your tax return right. Right? I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 3930. And yes.
It was so cute. I gave her a rental book, and her son, he's about 30 years old, and they had the rental book jam-packed with receipts, and they were highlighted for capital improvements, highlighted for landscaping. They did a really good job.
I think if you use those rental books, they're great.
Yeah, they did a really good job, and they walked out with 2 others because they said one wasn't enough.
Okay, the other thing I wanted to tell people, like when you start getting your investment statements and you have mutual funds in your investment statements, you're going to find a section that's under there that, in many of them, that talk about a section 199A income. That section 199A income is the income that would qualify for the qualified business income deduction of 20%. Don't miss that when you're doing your return.
Yes, that's right. It's
so.
Very
I mean,
important.
the other day I had somebody with $4,000 in 199A, so it ended up being an $800 deduction for them.
Wow!
So you just got to make sure that you do your QBI
and it's so
right.
easy to miss that little thing on the record statement.
All those little statements, all those little numbers, all mean something.
Yeah. This person says, so the people that had better numbers and won one of those big payouts on the Super Bowl pools have to mark down the winnings?
Yes.
Yeah. But a lot of people are under the assumption that they don't have to because they're not getting a gambling winning statement at the end of the year, a W-2G.
Ask Al Capone if he had to claim the income. Oh, he's dead. But he did go to jail for tax evasion, right?
Right.
All right, let's go to Hank in Cheektowaga. Hey, Hank, how can we help you?
Hi, Esther.
Hey.
Quick question. I had an IRA, a Roth, for years.
Yeah.
I had $6,000 already this year put into it, but I'm running into owing some taxes because I had a good year. I'm self-employed.
Good.
And
how much is your net profit, Hank?
Net this year is going to be just about $70,000.
Okay. All right. Go on.
I had 6 in the Roth. I had another 7 I could put. I opened a traditional thinking I could put 7 in that. Well, you can't because the 7 is the combined Roth and traditional.
Correct.
1,000 in the traditional. Can that contribution I made to the Roth be, I don't know what the
reclassified?
Reclassified.
Okay, they won't allow you to reclassify anymore, but here's what you need to do. Why don't you do an SEP? You could put like $17,000 away into an SEP.
I opened an SEP already. I haven't put any into it.
Well, if you put money into it, then that's a good thing.
I mean, crunching numbers, seems it tops out about, if I put in 13,000, I'm doing this on a computer.
Yeah.
It only like 12.9 something. So I think I'm hitting that percentage limit. But they're all circular, you know.
No, there is no percentage. It's the 20%. So it's 20% of the 70. So maybe it's maybe it'll end up. You said 70, right? Yeah.
Yeah, 69.
Yeah. So that's 14 something. But you're limited on the Roth, but you can put the 14,000 in the SEP, and if you're in the 28% bracket, saves you some money.
And you can still put money into the SEP for 2019.
Right, up till April the 15th.
It seems when I put, I say put it, don't put it, but in the form I'm on a site. That SEP deduction goes up above, so it's like a circular calculation.
No, it's an above the line deduction. It's an above the line deduction, but it doesn't reduce your FICA.
Because I hit a point, I got an advance credit for the health insurance, which based on what I...
Well, again, I don't have your situation, but that's something I could think about. But unfortunately, I got to get back to the office. Frank, love to talk to you. I mean,
you
Hank,
can
I'd love
call
to talk
me to
but
double check.
yeah, you can give us a call, 632-7886. Okay, I got to run. Thank you, sir. I'm Esther Galise, the tax lady from... I'm Esther Galise, the tax lady from EG Tax. If you need the best tax help, we hope you'll give EG Tax a try. Call us, text us. You can use my email address, egtax, egtax@hotmail.com, or you can go to our website at egtax.com. Ask the tax lady. We'll see you next week. Bye-bye.